All right. Think we're good on the stream. If I could check my sound. Well, should be good. All right, just waiting for people to show up. Stream Health Green today. That's the same title as yesterday's video. I'm going to make this. Tuesday. Saved. Okay. All right. 3 people. What's up, guys? Gonna get started in a few minutes. Four people. Starting in 4 minutes. If I start talking now, it's like nobody here yet. So let's give it the 4 minutes. I wanted to start blabbing, but I'm going to hold off and wait till more people show up. Start on time. If you're here, say hi. Unless you want to just lurk. Starting in 3 minutes. Just wait for people to come in. We are starting in 2 minutes. Starting in 2 minutes. Check the stream volume. Volume's good. Okay. 2 minutes, guys. Welcome to the stream. Starting in 1 minute. Anthony, what's up? How many people in here? It's only 5. I'm going to start talking, and it's going to be like 20, and most people are going to miss it, but let's give it a little longer. I'm going to pick up right from where I left off, which we didn't really move much, but talk about what did happen, because we did get some new information, talk about the plan. Really, that new information, some of the more valuable piece of information here, before I give it away, is we already talked about this stuff yesterday. We saw demand coming in here. We were saying if it was, I guess we're starting now. If it was going to go lower, that we would want to continue to see demand. Otherwise, it could break. And again, the lower price is getting rejected on high volume, right? This new high ground, since we've been in this accumulation range, tells us something pretty classic situation. Nothing new under the sun. And if somebody here, how many people are here right now? Only 5. Of you 5, who knows what happened here? What do we want to call that? And what does it mean going forward? If we were seeing buying and accumulation off the 10 area, we started to move up into some higher ground over that accumulation range. And we saw this. Again, if we kind of zoom out, trending down back to that previous bottom area from last week, I guess it was. And we went into this range where we did see buying into the down moves, buying into the down moves. This is the top of that range. That's the top of the little accumulation range, right? So this tells us what? I want to see if anybody has the answer. There's not many people in here yet. Anthony's the only one talking. Does Anthony know? Still 5 people. I know it may be. Yes. And what about it? Technically, we were, you could call this the automatic rally or the trading range, right? That was set, the accumulation range. So this is attempting to mark up. And there's weakness. So I call it a failed markup. So if this had broken out, right, and not seen weakness, we likely would have went a leg up, back to 12, 13. But new high ground reveals information about sellers, and there it is. And there it is again. So if this volume was, let's say, bigger than this, we'd have a problem. As far as if you're expecting it to move up anytime soon. So it's a fair amount. It's not overwhelmingly huge, right? But it's there. And it tells the buyers you're going to get lower prices if you just chill out because there is supply here. What's going to make these buyers that are buying into these down switch over into marking up price is lack of selling, right? We did an imbalance in the market, and higher prices reveal that and say, okay, there's no lack of selling. That's certain. It's not huge, but it's certainly there. So markups don't get forced out of accumulation. It happens once it's cheap to mark up, once the supply is removed, so to speak, right? So I call that a failed markup. It's basically a fake breakout if you go probably a little higher time frame. But it's a failed markup, which means at this point we're likely, so we can have a plan knowing that. 9 people in here now. Well, this is being recorded, so for the people who are maybe missing the beginning. So going forward, I'm basically using this as an automatic rally, right? This is now still the accumulation range. Okay, it's a failed markup, But the point of that means that if we were going to successfully go into a markup, and I would call it, okay, now we're successfully marking up, not failing, we would have to get above here. It's just common sense, right? So if we test this level and get slightly above it, and the volume doesn't increase, let's say it stays, a very slight increase or even stays low, it tells us it is likely a real break, going into markup for real. So when markups fail, meaning you have accumulation, you have your range set, and you try to get out and you hit sellers, going forward, I consider that having to be broken to tell me I'm in markup phase. So, we know the seller's area because they could show up again, right? It's about price areas more than anything. And higher prices attracting sellers here. So they could show up again, right? It double tops off of weakness again, right? And those are the kind of things that can get you stuck in a range for a while. Sellers are active here, buyers are active here, and we're just sort of bouncing around. Simple logical stuff. But once the sellers are removed, maybe the plan going forward would be what? See this level. We're in the middle of this range we've been in. See this level and see slightly above new high ground, right? And at the resistance to see if volume, doesn't increase substantially the next time around. And if we get through it properly, then we're officially in markup. And any positions you may have gotten in here or at the previous low, whatever, are looking good. That's if we move up, right? Now, if we see weakness, you sit back. I wouldn't sell off because of that or anything like that. Now, if we move up, and two options, right? You see weakness or you don't. And this is basically analysis, not exactly entry. We could talk about entries after. We need to understand first, and it kind of becomes obvious, right? Sean, what's up? Yes, sir. And I'm going to be going back to live sessions. We'll talk about that. So that's if it moves up. Now, if it moves down, two things can happen, basically, more or less. So if it moves down to this support area or slightly lower, and I say here, right, slightly higher. See, we have a support here and went slightly lower. That's the kind of stuff I'm talking about. It happens so often, right? You have a little high here, went slightly above. So that's really how you get your answer. Lower prices tell you about buyers. It's nice to see support, but if you can tick a few below, then you really get a good answer, and there's your buyers, right? Sign of strength. And it moved up off of that fake break pattern and all that. Now, if we're coming back to test this and slightly below, if we don't see, talk about different things that could happen. There's only so many, right? It's got to move up or down eventually, so we'll cover the bases. If it moves down to here and the volume is high, it's likely bouncing and we're staying in accumulation range. Now, if the volume is very slightly increased or not increased very much, staying on the low side as we're testing this and slightly below, we could be going for another leg down. Nothing huge because demand is there. But again, after something like this, right, it's a failed markup. So we need to kind of reset or reassess the likelihood of the markup. And that would include buyers still being active here and really sellers being inactive here. And that's what's going to lead to it. Just because there were buyers here doesn't mean it has to hold. Of course, anything can happen. This gives a slight more probability that we could go for lower prices because this happened. Common sense, right? Some sell activity. So again, if we can get down there, we'll find out. If volume is high and we bounce off, it's another opportunity to accumulate and say 10 is likely holding. Very, very good probability. And now then you can see combination of things knowing that information. If you come up here and volume is not very high, but we still don't make it out, it's telling you what? That the selling is starting to dry up in this area. And it may do that, and then I'm trying to think of different scenarios, but you get the same, you're able to make a conclusion. If for some reason we're able to see lack of real selling here, but we don't quite mark up yet, for whatever reason, and then we're coming down, very high probability that that's a good trade off another sign of strength, and you were going to get through it, right? So hopefully that gives you a view on what this is now. If you look at, just comparing the amount of buying that went on down here, and also previously when it was in this area, compared to the selling, we're likely going to move to the upside. It's just a matter of, if this brings it down, seeing what's happening here. If there's a lack of demand again, lower prices would be where to look to get in. And if we're looking at it just from the 1 hour point of view, and if we're talking about, again, this area, demand showing up or not. If it does not show up, just now we're looking back a little further, ton of demand back here. So we have our roadmap, right? And again, I'd wait to see it in this area. The 1 hour wick pin area is a good area to see if buyers are starting to enter, right? I normally draw that box over here, which I guess I could do, but whatever. Starting from, this pin area is where if we revisit that and slightly below, we would want to see the demand come in, and we'll say, okay, even better price to get in. And, look for the setups. I don't typically just jump in off strength. Some of you know my setups. Ryan, what's up? Been a while. Trading the cryptos, things have changed a little bit. It's been a while. New horizons. Same thing though, right? Markets are markets. If we look at the daily chart, we really haven't gone anywhere for like 5 days, right? Since we dropped 1, 2, 3, 4, 5, 6. But again, the overwhelming volume is the buying here. And again, we were looking back and saying if it goes a little lower, we looked at that low, and all that buying it could happen again, fake breakout, and again come off of that. If we look at and I do like daily charts more here than on Forex. I tend to not go over the 1 hour, but I do like these with real volume. Here, if we kind of get perspective on the, again, accumulation, and this being the high, that's the automatic rally, right, from the 1 hour point of view, as most of you know. And that can give you a read on the sell activity, and you notice it's not high. So again, the buy activity was large, and this didn't come down because selling overwhelmed it. It's because buyers are still in this accumulation type of phase. If for whatever reason they didn't want to mark it up and they expected lower prices, it's not for whatever reason. It's because 13 brings a lot of supply. We know that. We can look at the depth chart and look at 13. Right there. So if you're a buyer, okay, you're here, but are you going to buy through that? If you're a smart buyer, of course not. Let it come down, right, and accumulate. On another visit or down the line, there may not be that wall of supply at 13, and we'll be able to get through it, particularly if we build up more demand and more confidence into maybe a down move. So that's the big picture. Again, I really do like the daily charts a lot better on the cryptos compared to in Forex. I'm just using it, for everything else, but not really volume. But of course, it's multiple time frames. The smaller time frames tell you the details about what went on here. This could have been weakness. Could have been a lot of selling here and not much buying here. So you got to get in there and see and make sure it's what it appears to be, like I say. But this is a classic situation of accumulation, automatic rally, and this, if things are going to go according to how very often they go, if it moves down, it could do a fake break or spring, right? Again, with the buying demand coming in, and then from there, start to mark up. That's likely the low if it does a fake break with strength, right? Same old stuff. Some things never change. If the buyers don't show up, I'll be looking at 8 or whatever levels that may make sense and find them if that happens. But obviously the sentiment here is to, accumulate. So we know what that's going to lead to once the supply is gone. Ryan, yeah, let's take a look at it. What I did was, I don't know if you know how to go about it. One of the most common things people are doing is signing up with Coinbase.com, and then they have the GDAX account, which you can deposit from your Coinbase. Anyway, if you go to Coinbase, that's how you can get it set up. You don't have to wait, days like opening an account, a Forex account. You just do it instantly, basically. Old baby Pips days? What's that? I don't know, something I was talking about before. Sean, there's a lot of talk about Oxford's expiring 26, yeah. Maybe we're seeing accumulated preparation for that. Yeah, I'm not too focused on that. Whatever the chart's telling me. It's definitely accumulation, a little supply hanging around, keeping the buyers from marking it up. There may be a timing issue with that, yeah. What's up, Ed? McAllister, welcome back. So today I'm just doing an hour, 45 minutes left. We can look at whatever you guys want to look at, the Forex stuff, whatever. I wish we had something a little more exciting, but again, at least I have a plan, and it's very straightforward. Again, to sum it up, if we move up here, we saw some supply. Here's the 1 hour chart view of it, right? Sign of weakness, failed attempt to mark up because of sellers. Is it overwhelmingly huge and changes the whole situation? No, but it's certainly there. And buyers are not dumb. They're not going to start fighting, right? They want that to go away. So if this volume was flat here, we would not have done this, right? We would have started probably zigzagging our way up, to 13. So for now, supply hanging around. It tells buyers, hang on, you can get more at a low price. Let it come down. Is your sign of weakness to confirm that? And of course, a fake break of this kind of support resistance area, fake attempt failing. So again, if we move up and weakness does not show up, we're likely marking up. If we move up and weakness does show up again, we can be stuck in this sort of range of, sellers are active here, buyers are active here, and we can't really get out. There's no imbalance to help us out of the range. So that's if we move up. Again, if we move down, and I wouldn't, be looking to, okay, sellers are active here, and I'm taking profit, I'm selling, or, it's against the background. And at this point, I'm, more of a buyer in general and looking for those opportunities. Now, if we come down, again, strength should show up. And if it does, particularly on a fake break pattern, we're going to go for the high again. We'll see if sellers show up. If they don't, we start marking up, right? If we move down and the volume is not high, particularly the smaller time frames in real time will tell you, then, and we see it break, or even if you have some increase in volume, but as a result, right, you need the result from the effort. 2 candle pattern, basically, you could say on a 1 hour chart. But if we see some volume or no volume, whatever, and we're just not bouncing as a result, and lower prices are not bringing that demand anymore, it's a common occurrence, we could go another leg down. So if you're looking to buy off of here, the best thing to do, of course, is see the reaction, see that the volume increases, the demand is there, and then you can enter off a no supply, you can enter however you, but that's the understanding. Again, if it goes lower, this level's like 8. It doesn't have to go that low to find buyers, but it may. It's a matter of seeing where large demand starts to come in and taking it from there and sort of playing this game again where, okay, demand's coming in, but we have to get through, and start marking up. So it could sort of come down, hit strength, and reset the situation. But again, it's likely to communicate very clearly once it tests this level if it's going to bounce or break. It's likely to communicate very clearly here if we can mark up, right, lack of weakness, or we're going to come down again if we see weakness again. So we're sitting in the middle of the range, right? What can you do now? Just wait. But my plan is easy, obvious. My expectations, basically, for whatever may come. It's pretty straightforward. If anyone has any questions, and then I'll move on to, I guess we can look at the Forex stuff or whatever. Your questions, suggestions, go ahead. What's it going to take for us to get through 13? That's my question for myself. Because 13 is a ceiling for now. What's it going to take? I'd give it two basic possibilities you can narrow it down to. That we actually end up going lower first, building up a lot of demand. And maybe more confidence, so people are not looking to sell at 13. Confidence, basically. Or on the other hand, you could call it fundamentals. If something's happening with Bitcoin and it's being used by something that's, if demand in the real world increases for Bitcoin, then 13 will be broken. Just the law of what demand is going to do to the market. Strange time for a session, yeah. Well, normally I was on at 3 a.m., so 10 p.m. for me is normal, finally. But yeah. When I go back to the live sessions, and I'll email you guys to let you know when I'm doing that again. This is just kind of for fun, free. But I want to stick to this time and London Open. So there'll be 2 hours of session, but it'll be broken up. One will be 20 minutes ago, focus more on cryptocurrencies. And then at London Open, we'll do an hour more focused on the Forex stuff. But we can look at both, both sessions. So that's the plan. I'm also going to record the sessions, so if people miss one, miss both, can't make it for a week, whatever, and you still want to learn, you still want to look at, the analysis at your own time, you'll get sent a link to the sessions. So, but it's 2 hours and broken up, 10 p.m. and 3 a.m. What is the difference in behavior in the crypto market versus Forex? Well, behavior is general, but I'll give you all my observations here. Hope it increase your attendance. It should, because a lot of people would say, I can't make the session until you do New York. It depends where you live. If you're able to even attend, 3 a.m. for some people that don't work in the U.S. But that's the time that I want to be, on the charts myself. It works for me. My kids asleep and everything. At 10 p.m. is my time to focus. And then, of course, London Open is the other time. So for me, it just works. I was going to say something and I forgot. Oh, yeah, I'm answering your question. So what's the difference between behavior? Okay, difference in behavior. First of all, this is a little more, I'll give you my observations here. This is a little more steady, meaning if you look at the chart, there aren't long, this is a 1 hour chart, so seeing the last few days. If you notice, there aren't long dead periods. It's kind of a little more steady. Steady is the word. It feels a little more steady as far as volatility. With Forex, you get really dead spots, like this time of night very often, unless you have news from Australia or something. You're just sitting there doing nothing. And then, on the other hand, you have high-impact news releases, which at times, right now the volatility is not so crazy, but still it happens, much more compared to Bitcoin stuff. You have really, high volatility, spiky craziness on news, non-farm, you have these kind of high, intense focus, this point in time, the fireworks start. You don't have to worry about that here. So it's nice in some ways. You don't have to check high impact news for the pound and all this to create the volatility, and also can create a dead time beforehand. You can have Thursday, the day before non-farm, Friday, and you're just kind of sitting there and everybody knows why, because, there's no high probability move and there's no great imbalance at the moment. People may be even getting out of the market in advance of the release. It's all about the next day, you don't have that stuff here. Obviously, and if you're really new to this, we're used to coming from Forex where you could sell something that you don't own. You're dealing with a broker. You're not directly going into the market with no middleman or anything. If we wanted to go short the euro dollar, we could do that without actually owning euro. So in this case, you have to buy Bitcoin in order to sell it. there are ways to short Bitcoin without it, but you're still buying something else against it, I suppose. So, but I can't go here in my GDAX account where I can trade Bitcoin and just start selling Bitcoin. I need to acquire it first. I need to own it. So, and there's no fee for limit orders. So there's basically no spread, which is amazing, right? Some differences. Even if you do take a market order instead of a limit order, you get the fee is very small. The spread is small. There is no spread. It's just a fee. But if you use a limit order, you're considered a market maker, and there's no fee at all. It's like no spread. But of course, you have to buy on a down tick. You have to sell on an uptick, and then you with your limit order, and you get no fee. So there's that. Generally, I think traders that are getting into this, which more or less everybody's new to some extent. Most people are new. When you have to actually own. Again, you can go through a period of trying to acquire Bitcoin at low prices, and therefore now you have some to trade with. You can it's buy low, sell high. Nothing ever changes. It's all the same stuff. Supply and demand is running things, and there are large traders with large amounts of money who know what they're doing. It's all the same stuff, fake break patterns and strength and this failed markup, and we've seen it all before. So that stuff's all the same. This is a fib retracement of this last up move, right? It's 50%. I don't even have to draw a fib. We already know it. Why did it stop there? A little demand came in, right? You see it, sign of strength, slight volume there. And here we are doing this off of basically a fib retracement of the last up move. It's all the same. So this tells us what, if we look at it in real time, it's slightly on the higher side, this volume. I wish I could get rid of this average volume thing. I don't need that. But a bit of demand came in here, which tells us that buyers are a little more confident. Now, again, if we push up here, we know the plan. It doesn't have to come down. It doesn't have to do anything. It can do whatever it wants, and I have my plan. If it breaks through here without weakness on the second try, then it's in markup officially. It would be very odd and rare and weird to kind of get through here without weakness and not go very far and then hit weakness. It's either going to be there or it's going to break out properly, and you're likely going to trend upward to this 13-ish, 12-8. And again, you can kind of see ahead, again, different from Forex, as to where. Now, this isn't accounting for market orders. If people are panic selling or buying off some news that's actually legitimate, that's going to bring demand to Bitcoin or something, there's going to be market orders, right? But these are the limit orders, which at least give you a sense of the sentiment of the support resistance levels that you could run into. Again, that's why I keep mentioning 13 as a resistance and 8 as a support in the bigger picture here. It would take really something insane to get through 8. It would take something to get through 13, whether it's good news or we see a lot of more demand building up, and it kind of takes out those orders and continues. So different from Forex, you could actually see that. In the end, if I didn't have this, it's nice, but it's like, okay, if we're saying 8 is likely to bring a lot of buyers, right? We're not going to set a buy order at 8 and go walk away. Well, you could. Depends how you trade. But it would still be the same thing, where I have to see the demand come in at 8. I'd have to see a sign of strength. So if I didn't have that telling me, it would go to 8 and show me a lot of strength. Probably, stopping volume, high climactic volume sort of thing at 8 anyway, and give a sign of strength. So the charts tell you in the end, but it's nice to see that. So that is some of the differences. I know a lot of you coming from the, we have 20 in here. Okay, cool. Coming from the Forex world. During trending move, if there is not much volume in hourly chart, but 5-minute chart, there is slight increase in volume fib area. Is that enough to look for entry reason? If you're saying to look for entry, well, if we're You're saying during a trending move. Okay. So if you have a trending move, so let's say we're trending upward and you want to look to buy. Typically, I don't chase price, so I'm looking for retracements and strength. But if you generally have, my 1 hour volume, I'll say it like this. What I'm seeing on the 1 hour chart is more an overview and gives me my background, gives me my direction, tells me where smart money is positioned from, gives me like a bigger picture thing. So when I'm getting into trades that are going with the background that the 1 hour is giving me, I can go off the 5 minute chart and that's fine. Right. So if I'm in an uptrend and volume is saying this is a good uptrend, there's no issue with it. Volume is, like you said, maybe a little low because weakness is not coming in the higher prices, and that's a good healthy trend. And then the 5 minute during this, a little less activity, there's a long setup, sign of strength at a fib area, like you said, that's fine. So the 1 hour is more for getting your bearings, knowing which direction you're trading in, knowing where smart money is positioned from. Are they still in those positions? You get your direction, and then I use the 5 minute for the actual entries along with that. So you can't go short on a 5 minute weakness signal and a short entry if your 1 hour and your background and your volume on the 1 hour chart is saying that it's bullish, right? That would be a mismatch. So hopefully that helps. That's the way I do it. What brokers do you use for crypto? The margin is huge on the ones I found. I'm not trading on margin, at least not yet. But seems to be the most popular, which is I wanted to go with the most popular. I know this is new. This is very new. This feels like Forex in like 2003. It existed before then, but as far as people being able to trade from themselves from home on their computer, it feels like we're in about 2003, which means what? The regulations aren't quite there yet. It's new territory. It's kind of the Wild West. If you look at BitConnect, you have things like BitConnect. That's not going to keep happening. That's new stuff. It's a little Ponzi scheme they did. People will get wise to it. So it's these kind of early things going on. So the point is, what I'm saying is I picked the biggest, the main thing, people that know what they're talking about, and not trying out something that just popped up this week. What seemed to be the most dependable, and that's Coinbase, Coinbase.com. Again, it's not a broker. We're so used to these words like broker. There is no broker. It's just a real market, which is great. But with Coinbase, you can buy, you link it to your bank account. It takes 10 minutes. Take a picture of your ID and stuff. And then they do it right away. You don't have to wait days. And then you can, once your bank account is connected, you can use Coinbase to buy, let's say, Bitcoin or Litecoin or whatever. You could probably just deposit USD. I'm not sure, but that's the way I did it. So I immediately just bought Bitcoin. And then the next thing I did was go to my GDAX account, which I have a couple. This is my streaming account. We're sort of playing with this. I started with just messing around with this one. And hit deposit. Once you hit deposit, you'll see your Coinbase Bitcoin balance. And you can deposit it into your trading platform, right? And from there, you'll have your Bitcoin show up. And you could sell it. If you want to buy more, you can buy more Bitcoin through Coinbase first and then put it into there. And then from there, you buy and sell it. Or when you're selling your Bitcoin off, you're basically it's pure foreign exchange. It's pure exchange. Like we're coming from the foreign exchange, right? But this is pure exchange, meaning when you get out of a trade, you bought Bitcoin and you're closing the trade. You're not closing a trade. There is no open trade. I bought my Bitcoin and the value went up. So when I sell it and exchange it, not close the trade, but when I exchange it back to US dollars or wherever you live, it's going to be more money. That's it. So it's pure exchange. It's not a bucket shop. So the last thing is a bucket shop. It's funny, these brokers that we know through Forex, right, are offering Bitcoin trading, and it just defeats the whole purpose of trading through a broker. And the volume feed is absolutely awful. which tells you they're giving you some smoothed or indexed price. It's bullshit, bullshit, bullshit. It defeats the purpose. Trading with a bucket shop to trade Bitcoin. So you're really, truly just making exchanges in your money. There is no broker. There is no middleman. There's only a fee for the exchange, and there's no fee if you use a limit order. Pretty cool, right? What are the best times and days to trade crypto? Do you think crypto is more risky than other instruments? Okay, so first question, best times and days. Again, it's a little more steady. So it's not, okay, this time is usually dead and this time is usually active. Of course, you have the hours where most markets are open, which is, you know, London open for about 6 hours or something. 7, 8 hours. That's just the most activity financially in the world at that time. But on a Saturday night, this thing can go into new territory. There could be some aggressive buying. There could be, you know, something developing on a Saturday night. You know, you never know. So a little more steady. Again, the differences to me are all positive. I can't really find a negative difference. Unless you want your weekends off. Do you think crypto is more risky than other instruments? It's hard to say anything has more risk than the other. Well, in a way, it's less risky. Well, if you're starting off, and I would recommend you not trade on margin when you start, it's kind of refreshing to, sure, we'll look at the Forex charts next. It is a bit refreshing to know that when you're in a trade, well, you're not really in a trade, but when you buy Bitcoin, you bought it, and that's it. So the remaining balance in your account is not in jeopardy, unlike Forex, where if you go long the euro dollar, you don't put a stop loss, and it goes down 1,000, you can wipe out your account. There is no wiping out of your account. There is not even a trade open. You're just constantly moving your money from one currency to another and back, right? So your account balance is irrelevant. It has nothing to do with your open positions. It's not going to use margin and suck out your balance and give you a margin call, right? It doesn't exist. So as far as risk, well, obviously if you're not using margin, it's less risk. It's a general word, risk, but I mean, that is going to help new traders, you know, not fall into that trap, you know, of using margin and then having their account burned. You know, that's pretty much impossible. The worst thing that can happen is when you buy Bitcoin, you're not in a trade, you buy it, you own it, and the value drops substantially. And if you were to sell it off and put it back into your currency, US dollars, whatever, you'd have less than what you started. You know, if there was a crash, a real crash on Bitcoin, it would go to like maybe what, 5,000, 2,000 or something. Okay, so you lose 50% of your money, you know, give or take, right? So sounds like less risk to me. So let's look at Forex, yeah. Love those spreads, right? Spreads, I miss you. I want some spreads. But actually, no, it's been good. The range that we were in for so long, you know, we got out of. So it's a good, healthy move. I spent a few days up here, but okay, is there anything in particular? I can actually just kind of run through the main pairs. Let's do that. Okay, so give me 1 second. Let me get a drink and we'll do that. Make that drink on the rocks. No. Energy drink on the rocks. All right, let's just back out and do bottom to top, top to bottom. Okay, so overall uptrend, no brainer. euro dollar. Are we near any significant levels for really backing up and saying where are we in the big picture? And we did make it past. That's really the only thing there. This is a previous. I'm really going back just to kind of give a big picture. This is the previous kind of support term resistance. We got through that. This is the 50 fib and the resistance. We got through that. And, you know, even though we're not looking for a short, the significance of this level now breaking is a little more because we know that it's 50 fib. And we didn't reject it. We could have easily done, right, a double top fake breakout, hit high volume, which this is a weekly chart, but we're just, you know, giving the overview, and come back off of that fib, right? So the fact that we did close higher on the weekly point of view, and you see from the 1 hour, this could have been weakness, right? But we closed higher, we made it through, and volume decreased. And now here we're actually seeing some higher prices without, again, any sort of rejection activity and high volume. But the 1 hour is really going to help with that. Now it has gone into a range up here at the top. And the question is it reaccumulation? Is it distribution? Have they been getting out of these long positions at high prices, or have they been buying up more at low prices, or have they been doing nothing? Right? Basically, the options here. This is a long range to fit in. But if you look at, as we talk about, to simplify trends, if the high prices are not showing weakness, then smart money's holding on to their positions and they expect higher prices, and there's no reason to short. There's only reason to expect higher prices and look to buy dips, even though it's ranging. Because we're coming from this big trend. And where's the profit taking? Right? Not happening. So we know what smart money is thinking. Because these are great opportunities to get out. I mean, here, right? Great opportunity to get out. Low activity. Here, great opportunity to get out. There was some activity, but look at the result. Higher prices are not bringing consistent selling. So there was a bit of activity there. But the fact that it didn't come down as a result, and these higher prices than that are getting accepted without much activity. Again, the supply is just not there. The profit taking, the selling is not there. So it stays bullish. Very, very different, right? If high prices showed some high volume, you know, this sort of stuff is a good trend. It would go out with a bang. So we want to stay bullish. And basically, I don't, you know, as most of you know, I don't chase breakouts. You know, this was the high. Imagine who chased this breakout. It didn't work out for them, right? So chasing a breakout, I would never do. But, you know, ideally, you want to buy low and buy on strength. This is, you know, projected to continue and is bullish. But since right now we're headed towards the high, all I could say is I wouldn't buy into the high. I wouldn't. Obviously, you're not selling unless it's high climactic volume rejecting this attempted break. That would be different. But otherwise, if we're getting through that properly, I would wait for that to continue and look for strength to buy in. And there could be a break test continuation, or just simple, you know, long entries, fib retracements, and things to continue from there. But chasing the breakout is the one thing I wouldn't do, as bullish as this is. If it does move down, we have areas to look for long entries and signs of strength and fake breakouts, which would be here. And of course, the best area would be here. It doesn't have to visit that, but if it does, if you find price here, slightly below, you see strength, right? You get a spring, fake breakout, whatever you want to call it. Those could very often be the end of the reaccumulation and start to mark up. So that's euro dollar. Again, it's if we come down, looking to buy off strength. If we move up, not chasing the breakout, but looking for signs of strength after convincingly it broke out, not a pop up and then the next hour comes down and it's a fake breakout, right? We need to really break out and look for those proper, you know, trade with the trend entries. So that's what I would do there. And just to take a little closer look at the previous action, give us some information. If you notice, like yesterday, buying and selling about even, and this is why we're kind of ranging for a while. Remember, though, that the long positions from that up move are still in. So it tells you the thinking of smart money more than anything else. They're not getting out. This is not huge volume. Let's get out of all those trends from the those trades from the uptrend. No, of course not. So you get a bit of weakness, a bit of strength. You go sideways. This area has balance basically for now, but it's bullish due to the fact that large money is holding, and that's good enough for me. If they're doing that, the probability is we're going up. Let's see what else. Now the pound has been strong. We moved up into new high ground. And as I say, in an uptrend, let's go right to that. New high ground is the best way to know the health of a trend, how much selling is coming in or not. So from 1 hour point of view, not very high, right? This is not the kind of volume that gives you a trend reversal at all, right? Again, this is a strong trend. Strong trends go out with a bang. There's a lot of profit to be taken. Supply, you hit the walls of supply. Certainly not that into new high ground. But there was, if you look at yesterday, there was, we'll get into smaller time frames, take a look at that, get the detail, because there was initially weakness, but there was no confirmation to short. And again, the key is that higher prices are being accepted, right? You've heard me say this stuff over and over. And so we could have weakness here, but it doesn't mean, at this awful time of day, I'm just going to start shorting. And we get a chance to see if that selling is continuous, sustained at this area. And with this much volume on it, right, but let's take a look at the 5 minute and see. Get some detail now that we know where we are. So this was the high that yesterday brought some volume and looked like weakness. Again, let's just see it from a 1 hour point of view, right? It's a trend with high volume weakness when we look at this. I hate that red. It just gives me the wrong feeling. I like my neutral brown. Red means it looks like it's bearish or something. Fire brick, that's red. Something neutral, tan. Sorry. Okay. So let's look at this weakness, right? Can't just go off the 1 hour chart. And then let's look at this attempt to move into new high ground. And this is very high volume in 1 hour. Okay. That's why we have to look at the 5 minute, right? What do we see here? This high volume stuff started way before the top. It's high volume leading to higher prices. High volume leading to higher prices. Does that mean there's not selling into this? Yes, there is, because that's high volume on a regular size candle into higher prices. There is selling on it. But what else are we seeing? This aggressive buying, right? High volume leading to higher prices. But here's the clincher, right? That's it. This is where the volume, if the 5 minute and the 1 hour were really aligned to showing you weakness, this is where the volume should be focused on the 5 minute chart, right? The higher prices. It's not, right, at all. So again, when you look at this, that's why I say 1 hour for background, 5 minute for details, and sometimes they tell you exactly the same thing. But again, from a 1 hour point of view, higher prices attracting sellers? No. There was activity all through here too. And this didn't really show a focused high volume sign of weakness, right? It's not there. So that's why you got to look at the smaller time frames, get the detail. You even get to the daily charts, and it's like you're really assuming a lot. Like on a daily chart, that's weakness or it's not. There could have been high volume here, here, here. We don't know, right? You have to get in there to see. So that activity was a mix of buying and selling, but not a profit-taking weakness because of high ground, sort of climactic on the 5 minute as well, sort of weakness. Okay, that now going forward, it makes more sense why this is not rejecting that, right? Why are we staying above that? Because it wasn't really focused selling there, right? 5 minutes said it very clean, obviously. So now let's take a look at the attempt to move above that area, which doesn't seem so crazy now that we've seen the 5 minute didn't bring that much selling. And so here's new high ground. Now the volume is high, and there certainly is some selling into that. Look at the result. Typically, you'll have a sign of weakness here and a fake break. We actually spent, half an hour up here. Higher price really came in this area. What do we see? Weakness again, right? It is there. We pull back. We get a bit of buying. So it's a bit of mishmash. So what's likely, and again, like I don't chase breakouts, so all I can give you is understanding of what this is. It's not an entry. But going forward, what I do. And the way to understand what's happening, really, then you can make decisions once you know whatever suits you on the style of trading. But to know the facts, if we see higher prices, just remember this. If we start to see this level and slightly above, and we don't see this high volume stuff, trend is going to continue. It will go for another leg up. If we float through here on medium, low volume, it's going. If we hit this, and again, we see selling, right? Fake breakout likely, and coming back down. So if you see weakness and it comes back down, this is the old range, the old high. And we get below there and we don't reject off strength. We actually, accept that lower area. Then we're likely coming down. Now, from a 1 hour point of view, that would be like moving up here and maybe getting, high volume. Because again, this isn't proper really weakness when you get in there. But here, let's say, or later on today or whatever, we try to get above that. You could potentially see, I'm just giving you different scenarios, very high volume and then come down off of that. Properly with a 5 minute showing weakness off of that attempt on very high volume, then it's a bearish environment. So it's really all about what's going to happen at this point, weakness or not, and the reaction to this level. So if it does come down off of weakness, I could look to short, particularly if it's high volume on a 1 hour chart. If it breaks through, again, without weakness and continues, then I would look to buy on signs of strength and do the usual sort of, go with the trend. The level's done, we broke through it, and go with the trend. Buy the dips, fib retracements, and all that. All right. There we do. Can you look at dollar? Yeah, let's see. We have 8 minutes left. I'm doing an hour today. Tomorrow I may not be able to do, but what I'll do is I'll email you guys. Let me just tell you this, and we'll look at dollar yen. Sure, we'll look at the yen pairs next before I go. But just to make sure everybody knows, if you want to attend the free streams, like I did today, I'll do a little earlier. I sent it out about 30 minutes early today. Enter your email here, subscribe here. You don't get spammed or anything. And any free streaming that I do, you'll get notified by email a little beforehand. And also, if you're interested in subscribing to the live sessions once I start doing them again, which will be soon, 10 p.m. Eastern, 3 a.m. Eastern, you'll get notified also by email when that's available to sign up for, if you want to do this on a regular basis as a subscription. And I'll also be giving recordings of these sessions, so if you don't make both sessions or whatever. Okay, can you look at dollar yet? Let's do it. Because, really interest in Forex has really diminished. And now that I'm trading cryptos, I see why. But I'm doing both. But I think that's where a lot of the action is now, too. So hopefully we get busy. Let's look at the yens. So first, I think you said dollar yen, right? Let's see. What download is used for charting? Right now I'm using Pepperstone. Real quick, but then I'll get into the yen analysis. You can get I'm using a Mac, so you can get Admiral Markets or any MT4 for Mac, and then you can go to open an account, and just make sure you know that. And you can type in what you want there. See, this was originally Admiral Markets, and I changed it to Pepperstone, and that's why you see Pepperstone here. So that's what I'm using. Okay. Now, if you're talking about cryptocurrencies, do not use a Forex broker. Bad volume. So you just need real price. You can go to tradingview.com or something like that, free. Or your platform where you trade. But TradingView is fine, or Coinigy. All right. Yen pairs. Let me just make sure I reset. So let's just kind of look at the differences, first of all, because the pound has been strong. The correlation is not so, it's not driven by the yen at the moment. So they're not correlated because the yen is not the driving force. The pound strength has been keeping it up. The dollar weakness bringing it down, right? So it's particular to what it's against. EJ is giving a range. So different analysis. The yen is not driving these pairs. This is what's going on particularly with the euro, the pound, or the dollar. But starting with the U.S. dollar, since you asked, dollar yen. And let's just do the analysis. I'll do it a little faster now, but let's do it top to bottom. Overall, do we have a trend? No, we don't. But we do have some good momentum, right? Two different things. Good momentum to the downside, though, right now. I wouldn't call it a downtrend, but the momentum to the downside is there. That's sort of the path of least resistance if you're looking for weakness to get short, sort of thing, right? These things you can treat like trends. In the end, it doesn't go anywhere, but, they'll do their trend sort of activities and, double top, come back down, fake breakout. So this, even though overall it's not a downtrend, it's bearish in the fact that there's a lot of momentum to the downside. And if you're trading a range, obviously you're looking at this area and that potentially could go. It's a range. Range is a range. But this is a big enough range to say there's sort of trending activity within it. We're not getting, a symptom of ranges in a real bad equilibrium is you get stuck in the middle and you see chop in the middle. In this case, we don't really see that. So it kind of feels like trends within a range. So if we're talking about bearish, and we'll get into the volume, but on the 5 minute, but let's look at the 1 hour. Again, you look at the 1 hour, you say, okay, I can treat this like a downtrend. And we saw that there wasn't any major support, until you get really to the bottom of the range. So, treating this like a downtrend makes sense. 1 hour chart. So new low ground on a trend, right? We have that information right now. So let's take a look at that first. That tells you the health of a trend when you get into new low ground on a downtrend or high ground on an uptrend. So what do we see? Pretty high volume. Now for this time of day, it's pretty high. So there's demand coming in. Is selling going to overwhelm that or not? We can look at the reaction, right, and see if it's a sign of strength or not. And also look at the 5 minute. Let me get the previous low that we just broke, which is that. So we are seeing activity down there. 5 minute is showing strength. Yes, it is. So remember the other example, the 5 minute and 1 hour did not match up. In this case, it does. So here is strength, which on the 1 hour is confirmed by a bullish reaction, but still, it's high volume into lower prices, closing off the low too. So the buyers are active. Demand did increase. It's just fact. But let's look at the 5 minute and see, is it at the low price? Yes, it actually is in this case, right? It's not here, some aggressive selling or something. This is where it's focused, right? That's the highest, that's the second highest, and these are the lowest prices. So, okay. Now we have proper strength. Now, that's going counter the bias, right? It's bearish. But the volume is very high on a 1 hour chart, which is, to me, crucial if you want to go against your background. In this case, again, it's not really a strong trend. There's mixed signals, but we're treating it like a trend because there's strong momentum to the downside, at least since yesterday. It's a real sell-off since yesterday. So to see this sort of thing, I would actually look for, now what level is this? I typically don't draw fibs in a range, but again, it's kind of trendy range. And it could be a fake breakout, an overshoot of 618, right? Oh, the overshoot of 618, you've heard me say it a million times, right? Plus a double bottom fake breakout, right? If it gets above here. So the reason why I'm even talking about that is because we see strength, high volume on the 1 hour strength. So going forward, it says what? I'm not just going to buy while it's moving down just because there's strength, right? But if we can get back into this area, first of all, from an overview point of view, back above 618, and just above that is the old support. So a couple of ticks higher than that, you end up really fake break pattern and 618 overshoot rejected on strength. From there, from an overview, it's likely moving up, right? Fake break pattern, high volume strength. demand showing up, high volume. If it tests, by the way, now from a 5-minute point of view, that's simply this. It's nothing crazy. So if price reaches there without any issue of supply coming in, weakness, then we have our bullish environment confirmed. Again, the driving force is the 1 hour's high volume. The 5-minute matches up, showing it is buying. And then it creates a bullish pattern of a fake breakout and overshoot of 618 coming back above it. So you start to pile up things that are actually saying bullish. Getting through here without high volume supply is important. The first move up here, which is now the automatic rally, this is the amount of supply that showed up. And this is why it stopped there, right? Because they're in accumulation mode, or at least possibly. We saw some beginnings of it. So to move up off of that, right, what's going to really stop it? Okay, we see some sellers. We create the automatic rally in the pattern. Going forward. Why did my line turn red again? Oh, that's because it's the other line. So that's our automatic rally there. Now the second bottom didn't bring a lot of activity. What I'd like to see if I go to the 1-minute chart is a spike in strength. Let's see. Yeah, there it is. Not bad. If we come down again, right, you see this low price, high volume rejection stuff. Look at this buying into the sell-off here. If they're accumulating here, that's good. But anyway, going forward, if it gets through here, right, it confirms the bullishness. And on the 1 hour chart, we'll have a sign of strength, right? High volume leading to, actually, it's the next hour now. So it would be this one with your upwards reaction. Or in an hour, 2, 3, whatever. So it looks very bearish, right? And it looks like, well, okay, maybe going to support. But once you see volume, you say, okay, there's too much demand to be shorting. And there's actually so much demand that if we can actually get a confirmation of reversal situation, which is, again, basically two things. If you come down, again, you want to see strength to stop it, or else it could go. If it moves up, you want to see lack of any high volume to stop it. That's not bad at all there. And see how it reacts into these areas. Slight increases you can live with. The lower, the better. And you get above there. And I would look there, basically no supply, because it's going to be testing for sellers here. So if sellers don't show up, basically you're bringing it to a point where sellers may or may not be active. That's why you're testing for them. Buyers pause their activity at these places, and sellers show up or they don't. Like in this case, they did. Or you can get, instead of that, right, when sellers don't show up, a no supply, low volume on the pause to test for sellers here. And again, getting above this key level. From there, we're moving up, if that's the case. So that's if it moves up. And if it moves down, again, it's really demand showing up, and it could be another low, or it could be down to the bottom of the range or whatever. Just because demand is there doesn't mean it has to stop. I mean, we still need to see the selling dry up. And that's what we do with this, is to confirm that we don't have sellers. If we don't get weakness here. The fake break and getting above 618 again would also be bringing it all together. All right, so there's that. It's already 3 minutes after 11. Let's see where we are. Very welcome. Higher prices to get a better price to short. If you're talking about the UJ, I'm not sure if you are talking about this, but I wouldn't be shorting into high volume demand ever. I want to align myself with what the high volume is telling me. So it may very well go up here, see some weakness, and come back down. That means I'll do nothing, because I wouldn't sell into high volume demand. If this volume was not so high, sort of regular stuff here, or flat or lower, then certainly I'd be looking to sell off weakness on an up move, definitely. But that's the difference. It becomes bearish again only if it really breaks this level without strength coming in. So we find out soon, baby. That's all I could tell you. Again, with this stuff, it's like, rather than, I feel like this is a little better, rather than focus on, okay, if I see this, this, and this, there's an entry I'm trying to get or something. I mean, at this time of day, I wouldn't take a Forex trade anyway. But giving you the understanding of where we are, what's going on, and if it moves up, you're looking at this to make a decision, to give you information. If it moves down, you're looking at this to give you information. So That's your sort of roadmap. Hopefully that's helpful. Cool. I've been saying, as my new saying, it's 99% facts. 90? Should we go 90? 90% fact, 10% speculation. And the speculation as much as possible based on the facts. We're not waking up and going, it's going to rain today because it's time. It's not until you see the clouds, you start to hear some thunder. You're like, all right, it's probably going to rain. Let the market just have its facts and then it kind of make it obvious to you at a point in time. This is very high probability now. So there's your speculation. It's very small. All right, good stuff. All right, guys, so I will, again, make sure if you want to attend free hangout, sometimes I do, 3 hours, and just hang out and do this stuff. Just put your email in there. And again, I will be doing the subscription-based. It will be here if they're on hiatus now. 10 p.m. for an hour, 3 a.m. for an hour, if you want to join as a subscription on a regular daily basis. All right, guys. Man, time flies when I do this stuff. But am I focused? I'm focused right now. It helps me really get focused. And one last look here. Nothing exciting. We know what we're looking for. So hopefully with this stuff we get a little, something develops in the near future. And we can take it from there and follow the storyline. Understand. All right, guys. Cool. My pleasure. This will be available for you to watch in a few minutes. Cool. Glad you guys found it useful. Okay. Tomorrow I may be on a little later, but I'll email you guys to let you know what's up, keep you informed. All right, guys.